If you are a business owner and you want to make a living out of day trading, I'm going to show you here why futures day trading is the way. If you don't know yet what futures is, I'm going to explain to you this one in the beginning. And if you already know and you are experienced, then stay on this video because this is going to, I hope, improve your trading. So first of all, with futures, we're talking about in futures, not exactly what future is when it comes to the exchange itself. What is more important is on the practical side. That means when you sit down on the computer for 1 or 2 hours, how many times do you have trading signals? The money making activity is not learning how to have an indicator and to see a green candle and to enter the trade. The money making activity is to see if you trade for 1 or 2 hours, let's just say between 9 a.m. to 4 p.m. Central Time, then how many times within those 1 or 2 hours can you see that you can put in $100 in average but get $500 out? What is also possible to make with $300 a single trade to get $1,500 a single trade out. If you trade options, I'm not very familiar with options, but what I know is that this type of money management does not exist. And when it comes to other things, you may have heard of Forex trading. Usually you're talking about not trading on the exchange itself. We're talking about a CFD, that is a replicated market. And now the thing is, why should someone trade a replicated market? The main reason is because you could trade with $5 a trade. It is replicated. And well, there are also some brokers, they're not that serious. They usually, the whole company is earning off your losses. But if you trade on the exchange, your losses is someone else's winnings. And this is the main reason why I believe in futures day trading is one of the best things. Because if you trade, for example, on stocks and you have like 5 to like 200 stocks that you invested within 3 years, this is like one shot of having the 7 to maybe like 45% target, right? This is like the dream thing. No financial advice are important, but that takes you like 3 years, 10 years, 20 years. And then if you just look on when it comes to trading stocks, just in the day trading area, you can use leverage. But the problem is just like with stocks, not just that it takes minimum of $20,000 to trade with. That means you cannot trade with a $3,000 account first or $5,000 account to try out. It's also you don't have the financial capabilities, that means of leverage. I'm going to show you how it works. In the S&P 500, the S&P 500 has $100 billion every day what is going in and out. And when it comes like, for example, to the gold, silver, for example, they have like $5 to $6 billion what is going in and out. The S&P 500, sorry, correction, is $200 billion, $150 to $200 billion without leverage every day. But with leverage, we're talking about $300 to $400 billion every day. The whole exchange, every American stock, has in total of $400 billion. You can research this using ChatGPT or Google, for example. And this one single market has $400 billion every day in leverage. So a Euro US dollar has $100 billion every day in total, but the future alone has $37 billion. So what I'm saying is that the S&P 500 futures alone has $400 billion leveraged. And because it is just so big in comparison to a Euro US dollar with $37 billion, or gold, silver, $4 to $6 billion every day, it just makes it so much more better because there's way much more money. They have even 2 times 15 minutes of maintenance, like 15 and 30 minutes of maintenance. This is with intention so that it's better for day trading. And this kind of market is running often for 3 to 5 hours, often just in one direction. What is really awesome. But it shoots in consolidation phases and in trending phases. And the consolidation phases are the ones that takes like 3 hours or 5 hours sometimes, or 30 minutes. And those pushes, they take like 15 minutes or 45 minutes. And this is the main reason why I just want trading 1 or 2 hours in a routine is the massive success that I see for beginners. And if you start trading for 5 hours in a row, it's not going to be better than if you trade for one hour and then just like 3 times a week, because the market has different market personalities over the whole day, and it's just not getting better, the personality over the day. It's getting better using the next day, the next week. So consistency is a very big thing. So the money making activity, trading futures, is when you sit down for within 1 or 2 hours, how many times can you see that you can put in $100 but get $500 in average out. And if you just compare this to the Euro US dollar with, for example, the S&P 500, if you use a 1 minute chart, because you have smaller references, you will have in the S&P 500 way more signals. And if you compare this also to gold, silver, or other markets like NASDAQ, you will have like up to 3 or 5 times more signals with that money advantage. So the money making activity is how many signals do you got? And then also the quality is like, what is the money advantage? And quality also means like to replicate it. That means when you see, for example, that the market was going up for like 30 minutes or longer, that means like here, for example, we go now to Central Time. Bottom right side using TradingView, let's go to -5. Here we have New York, for example, New York time. We have also here Chicago time, -6. And then when we do here, for example, compare here from 9 a.m., this is where the trading time starts. 8:30 is very dangerous. 8:30 to 9 a.m., just putting your hands off there. If you compare here the past hour though, for example, like between 8 and 9, and you see the market did here an up push, then very often the market just replicates it. Now you can call this gamble, but if you do this for 10, for 20 times, you just replicate the past, you will see that this market loves to copycat. It loves to copy its movement before, its behavior. It loves to also copy here those retracements here, as you see with the length. And now here on the right side, you can see how the market has around here the same length, as you can see here, like 70, 80%. And then check this out, like 50% of its retracement, what it did before, or even like almost like 70%. Look here, it just does almost the same retracement then, and then it continues to go up, right? So money making activity here is to find signals. I love for my personal use color switches. I see with beginners it works very well, and this is what I do a lot of videos about also on this channel. That means you see here the red and the green candle. A red and a green is a low. And we read from left to right, and you can see here that this is a higher low. And then within this, if you adjust from here to here, $100, it's $500 because you can see here the risk reward ratio is 5. If you do this with a $300 adjustment, that's $1,500 just until here. And then the next signal, check this out. We have here next color switch. Also again, right? Risk reward is even 7.5 until here, but only 5 until here within just like 7 or 8 minutes, as you can see here. This is just something what is very important, is to understand like what are color switches. Red, doji has nothing to say, but we need to take the wick, and then the green candle. And then if you adjust here with the entry and stop placement here 1 to 5, that's a $500 adjustment. So how do we know that the market goes up, and of course where to trade at? The one thing is we look at the past 1 hour. If you see it goes up, very good. If you see it's just wiggling around here, then it goes up. It's not good because it likes to go back very often. It's very important to understand that the market likes to go towards highs and towards lows. You can see here that this low here was being touched. Then the market shoots up, and if it does not want to touch the low, it wants to touch the high. But if the market is very consolidating for hours, it's very dangerous to trade, except you see that the market is doing a very long up move here. It got the high, it does here the higher lows, as you just saw, right? Like with experience, you will be able to see that the market makes more sense to go up here than down there. It's always just the highs and the lows where the market likes to go at, because people place their stop losses, and also people trade there because people trade their stop losses. It's just like, it's just an auction process. So we have this high here, for example. You see here the structure. Instead of using the candles, check this out. We're going here into the line, and you'll see here those apexes on the top. A high is the highest point within a specific time frame. So that means like within 20 minutes, for example, this was the highest point. Within 20 or 30 minutes, this here was the highest point. This was the highest point, right? So a high is just defined by the highest points, what the market had in a specific time area. And I like to take those highs that has not been touched anymore. It's a bit hard to explain. It's like if you have a high here from left to right, here there was a higher point, so we take this one. This high was not being touched in the future yet. So that means people still have their stop losses there. So if we just go by candles, you will find that every time we have a high here, it's like a green and a red candle, as you can see. And here we have a wick. The wick is always the highest point here. That's why you place it on the wicks. The wicks is like more accurate than what we just saw, because it shows us that people love to place the stop losses there. And you will find here now reactions. You'll see like from high to high is a big distance. And this is the main reason why the market cannot make it pushing fully through here. But the market has its own high here, what makes this such a good trade with a 1 to 5 here, right? So now you learned that the market likes to go towards highs and lows. You let the market go up for 30 minutes or 45 minutes or sometimes even 15 minutes. Depends on how you see it. And the next thing what I would like to teach you is the uncode VWAP. If you see that the market is pushing up, touches the high here, as you see here, is very near close here. This is already like touched the high, or like here already touched this high. There's a very big structure high here of like 5-7 hours, as you can see, your highest point. Then the market retraces to the anchored VWAP. This is the average price of the market, starting where the market pushed out. Volume weighted average price, just anchored on a low. It comes back to the anchored VWAP, and then very important, because from the anchored VWAP place it did this move, it should do around the same move away. This happens very often also, and then just aiming for the high. And everything what I told you, I hope you can take notes with it. I hope you can watch it over again. I hope it will improve your trading to become a better trader. Try to look at the market, the S&P 500, between 9 a.m. and 5, and like in this case, it is here like 3 p.m. 9 a.m. and 3 p.m. Please look on your time frame here. This is -6, right? Just convert it to your time. In if you go here now to your New York time, it will be between 10 a.m. in this case. To here you see it is 4 p.m. If you are though from what is very important, let's just say Los Angeles, then it's very important here to put it like 7 a.m. to 1 p.m. is your max trading time.